Well, it's been 6 months that I've been invested in the index fund that is the S&P 500. How has those last 6 months gone in my investment portfolio, and what does the future hold for the S&P 500? So yes, it's been 6 months since I started my investment journey into the S&P 500. Now, I've absolutely enjoyed having this asset in my portfolio, and it's really spurred me on to increase my portfolio with more index funds. So the S&P 500, what is it? Well, the S&P 500 is a large cap index fund. Now, it's a fund of the largest 500 companies in the United States of America. Now, these 500 companies are in a budget cap that allows them to be in that S&P 500. Now, for example, if one of those companies drops below the value, another company will come in and replace that. So there will always be 500 companies in the S&P 500. Now, historically, the S&P 500 has proven to be a very, very good long-term investment. You could argue that it's low to possibly medium risk when we look at the last history going back to the last year of the S&P 500. It's had a 15.46 returning yield in the last year, and in the last 6 months from May to now, it's had a 7.06% increase. So it's always performing at very good yielding returns, which is very, very positive for an investor. The S&P 500 average annual return is around 10%. If you're still watching this far into the episode, consider staying till the very end, because there's some bonus clips that I think you might want to watch. Now, how does the S&P 500 work? And let's find out a bit more about it. Well, the S&P 500 is essentially all about compound interest. And as Albert Einstein said, compound interest is one of the wonders of the world, especially when it comes to investing. Now, essentially what happens is with the S&P 500, it is an investment index fund where you put the same amount in every month and you set and forget. Now, what happens is you can have it on an accumulating or a distributing fund. Now, I personally have mine on an accumulating, which is where the interest gets reinvested back into my fund. So therefore, not only am I making money on the money that I have invested, I'm actually making money on the interest money that I've made. So essentially, you're making money on free money. That's what compound interest is. And essentially, the bigger it gets, the more you make. So it's a really, really knock-on effect. So that's why so many investors really, really enjoy doing investments which have a backing of compound interest. Now, the S&P 500 is a great investment for hands-off investors. You could say it's a set and forget strategy. Now, I don't particularly set and forget my strategy regarding the S&P 500 and my other index funds. I do still manually invest each month the amount I want to put in. And that is the same every month. I've set my goals and my targets, and that doesn't change. But I like having complete control, being able to select every month how much I want to put in. You can set up a pie chart on the S&P 500 if you're using an app like Trading 212, and that will allow you to invest on a regularly monthly basis. But here in the UK, when you use that with an ISA account, you can only invest up to £2,000 before it starts charging you a very, very, very small fee. But when you do free bank transfers, doing it yourself instead of doing it for a pie chart where it's automatically taken out of your bank account like a direct debit, you don't get charged any fees. So I like to do it that way, one, to avoid fees, and to also give myself complete control, because I like to be able to know where I am every single point of my month when I go to invest in my investments. Now, the S&P 500 is considered a very well-diversified sector. I mean, when you look at the fact that it's got 500 of the largest companies in the United States, you can understand how it is very, very well diversified. Now, there's no denying that mostly the biggest companies are in the tech sector, but there are, of course, lots of other areas where companies are involved in the S&P 500. So it is still very, very diverse. Now, I absolutely love it. I think it's a very fun way of investing. I like a set and forget strategy on a low risk long-term investment. And the S&P 500 really does hit the goals for me on that target. I'm not looking to stress myself out. Looking every single day if I need to retract my money or set a stop loss. I want to put it in and be confident that my money is going to progress and compound over a long-term period, giving me a really, really good yield in a long-term hold. I really would recommend the S&P 500 as a long-term investment. If you're somebody that has time on your side and you're looking for a low-risk long-term investment that's going to benefit you from compound interest, then I think an S&P 500 is a really, really wise investment to maybe consider having in your portfolio. Now, there is, of course, other index funds that you could have. You could have the Dow Jones, the FTSE 100, the FTSE 250, or the emerging FTSE index funds. There's plenty of other index funds out there. You can do your research and you can find some really, really great averagely yielding index funds that are going to give you a really nice return on your long-term investment. But for me, this is specifically about the S&P 500. I've had it for 6 months now. It's performed very, very well for me. I think only dipping twice into the red in those 6 months, which is actually very, very good when you consider the likes of other higher risk investments that are constantly going in the red and back into the green, the red and back into the green. So I like the S&P 500 for its safety, for its compound interest, for its longevity, and for its potential high returning yields. Its average returning yield is also very good. So that is my thoughts on the S&P 500. Going forward into the future, I will continue to keep investing in it into the following decades with other investments like the FTSE 100 and my other investments in my portfolio. Of course, I'm a big believer in having a diversified, balanced portfolio because not only are you spreading your risk, you're also spreading your opportunity to make better yields all across the world by allocating investments in different corners of the globe. So thank you very much for watching. I hope you've enjoyed this episode. Thank you to the channel members. I really appreciate your support. You make up a huge proportion of the channel revenue, so that means an awful lot. And until next time, I'll see you all in the very next episode. Thanks for watching, guys. Bye-bye. Now, thank you very much for staying till the end of the video. Now, to those of you that have spent the valuable time, that is your time, I'd like to give you the opportunity to use a discount code which can get you money off of your bullion when you buy silver or gold at Tavex Bullion. A link is in the description for their website. You can use my discount code Future Investments, and that will give you a percentage off of your purchase. So I hope that helps with your bullion purchases, and it's just a little thank you to say, thank you for sticking till the very end of the video. All right, until next time, I'll see you then. Bye-bye, guys.